Hey guys, Jared Wesley here of Live Traders, and we're back for another edition of Quick Tips. Today's topic, guys, is going to be on how and when do you raise your risk in trading. This is a big time topic. Why? Because it's going to determine your success or failure, right? We always talk about money management in trading. Well, a lot of people don't have any money management because they don't have a trading plan, because they're just a bunch of hackers that think they're going to get rich quick. Does that describe most people that come into the business? Yes, right? They come in overhyped, undercapitalized, and they have expectations that grossly exceed their experience level. So when you're new, the first thing you have to be doing is risking $5, maybe as much as $10 per trade. You heard me. I don't care if you have a $10 million, $100 million account, okay? When you are new, you will be risking $5 to $10 per trade. That means if you lose on the trade, you will never lose more than $5 or $10. Why? Because to succeed in trading, you first have to last. If you can't last, you won't succeed. It's no different in any business. It's no different in any sport. You wouldn't go out tomorrow and play Phil Mickelson or Tiger Woods for $5,000 a hole in golf, would you? No, because you're going to lose $5,000 a hole in golf. Well, in trading, it's no different. You have this idea, this attitude that you're different. I'm different. You're not different. Okay? Everybody struggles in the first 3, 6, 9, 12 months, even if you get a little lucky. So that brings us to the question. Now that you've been trading for a little bit, how do you get that risk from, say, $10 up to $25, up to $50, up to $100, up to $500, up to $1,000, up to $10,000? How do you go about that? One word: slowly. Okay? So these are some of the rules that I'll give you guys. These are general guidelines. You can make up your own rules if you will, but these are general guidelines. I like to see 3 consecutive months of consistent profitability. I consider consistent profitability 10R per month. Now, you don't have to go 10R, 10R, 10R. You can go, for example, 17R one month, 4R the next month, 12R the other month, whatever it may be, okay? But what I don't want to see is you go 17R one month, minus 6R another month, and then plus 7R another one, whatever. I don't want to see that roller coaster. I want to see consistency. Remember, guys, and keep this in mind forever, you earn the right to raise your risk. You don't raise the risk because you feel like raising your risk. You don't raise your risk because you're on a losing streak or a winning streak. This isn't some martingale approach, okay, in blackjack, all right? Raising risk is a very, very serious thing. You also need to have rules for, wait for it, lowering risk also. If you go through a nasty stretch, you might need to lower your risk, especially if that stretch lasts a couple months. But the general rule today, guys, is 3 months of consistent profitability at roughly 10R, okay? Averaging roughly 10R. And then you can raise your risk from, say, $10 to $25. And then when you have 3 more months, raise it from 25 to 50. 3 more months, then raise it from 50 to 100. And then once you get to the $100 to $150 level, you can raise it in $100 increments. 100 to 200, 200 to 300, 300 to 400, 400 to 500. Once you get to $500, then you can start raising it in $250 to $500 increments. You can go from $500 to $750, or $500 to $1,000, and then $1,000 to $1,500, $1,500 to $2,000. But here's the key. You'll notice, if it takes 3 months of profitability to raise your risk, how long is it going to take you to go from $25 to, say, $1,000? Yeah, you heard me. Probably a couple years, 2 or 3 years, or more. That's what I want. That's what you should be thinking. Slow and steady, guys. Stop thinking you're going to be the next get-rich-quick person. You're not going to be. All right, if you want to be successful as a trader, use proper money management and raise your risk very slowly. You earn the right to raise your risk. Okay, I understand. You're like, oh, but Jared, I just lost my job. Oh, Jared, baby needs new shoes. Oh, the mortgage is due. The market doesn't care. The market doesn't know about your personal situation. So do not project your personal situation onto the market. Let me ask you a question, okay? Because I like to use common sense and many of you don't have any, all right? If you're shooting 80 as a golfer, but you need to shoot 70 to make money on the PGA Tour, do you just snap your fingers and shoot 70? No. You have to work from 80 down to 78, down to 75, down to 72. And what's that usually take? Years of practicing golf or any sport. I don't care what the sport is. You don't just snap your finger, but my mortgage is due. So, who cares? Stop projecting your opinions or your needs on the market. The market doesn't care. You earn the right to raise your risk, okay? And that means you need to track all of your trades as well, okay? So it's a very important topic, and trust me, you don't want to be featured on an episode of When Will the Insanity Stop every Wednesday. I mean, look at guys, look at this screen. Look at some of these idiots, okay? Oh, I just lost 90% of my account. Oh, I just lost $10,000. Oh, I just lost $60,000. That's stupidity. Why? Because they raised their risk too quickly. They had no idea what they were doing. They were gunslinging and hacking because they needed money. That's not how it works. You raise your risk when you're ready. And how do you know when you're ready? Your results will tell you you're ready because you're tracking all your trades, right? You're tracking all your trades? Sure you are. Okay? So your results will tell you when you're ready to raise risk. Every 3 months, if you can make 10R, 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 again, average it out, maybe 1 month's 15, 1 month 7, whatever. Average it out. When you get to that point, raise your risk to the next level. Okay? I'm Jared Wesley of Live Traders. I hope you guys enjoyed this edition of Quick Tips.